The Arab oil embargo and ethanol 50 years later, energy, power, strategic vulnerability, and the long-term transition towards fuel sovereignty. Introduction. Energy as a weapon of geopolitical leverage. Energy has never been merely a commodity. It has functioned as a lever of geopolitical power capable of reshaping global economic structures, altering diplomatic alignments and redefining strategic hierarchies among states. The Arab oil embargo of 1973 represented a structural break in the modern global economic system because it demonstrated with unprecedented clarity that control over resource supply chain can translate directly into political influence and macroeconomic disruption. The embargo exposed the vulnerability of advanced industrial economies whose production structures depended heavily on imported hydrocarbons. The long-term consequence was the recognition that energy security is inseparable from national security, economic stability, and technological autonomy. The subsequent development of ethanol The subsequent development of ethanol and other alternative fuel represents not merely an environment of technological transition, but an attempt to rebalance the distribution of power embedded within the global energy architecture. Historical background. The strategic shock of 1973. The origins of the Arab oil embargo lie in the geopolitical tensions surrounding the Yom Kippur War of October 1973. In response to Western support for Israel, members of the Organization of Petroleum Exporting Countries, or the OPEC or OPEC, imposed export restrictions targeting the United States and several European countries. The immediate consequence was a rapid and dramatic increase in global oil prices, which quadrupled within weeks, triggering inflationary pressures, supply shortages, and a deep structural shock to industrial production systems. Consumers experienced fuel rationing, long queues at petrol stations, and significant increases in transportation and manufacturing costs. The crisis demonstrated that oil producing states possess the ability to manipulate global economic conditions by controlling supply flows, effectively transforming energy into an instrument of coercive diplomacy. According to the renewable fuels associated retrospectively, According to the Renewable Fuels Association's retrospective analysis, the embargo significantly contributed to the stagflation that characterized the late 1970s economic environment. The 1973 crisis shattered the prevailing assumption that energy supplies would remain abundant, cheap, and politically neutral. Instead, it revealed that dependence on concentrated resource suppliers creates structural asymmetry in international bargaining relationships. Nations heavily reliant on imported oil discovered that their macroeconomic stability could be destabilized by external factors with divergent strategic objectives. The realization initiated a long-term transformation in energy policy frameworks, focusing on diversification, domestic production, and technological innovation. Economic consequences: inflation, stagflation, and structural instability. The oil embargo generated a series of cascading economic effects that extended far beyond energy markets. The increase in crude oil prices raised input costs across multiple sectors, including transportation, agriculture, manufacturing, and electricity generation. These cost increases were transmitted through supply chains, producing cost-based inflationary pressure across consumer goods and services. Simultaneously, reduced industrial output and decreased consumer spending contributed to economic stagnation, creating the unusual phenomenon of stagflation characterized by simultaneous inflation and unemployment. Energy costs represents a fundamental concept of production functions, influencing marginal cost curves and equilibrium price level across the entire economy. When oil prices increase dramatically, the resulting cost shocks reduce aggregate supply while simultaneously decreasing consumer purchasing power. This dual effect creates structural imbalances that are difficult to correct through conventional monetary or fiscal policy instruments. The 1970s therefore became a decade marked by persistent inflation, reduced productivity growth, and macroeconomic uncertainty. Strategic lessons: energy dependence as structural weakness. One of the most significant lessons derived from the oil embargo was the recognition that concentrated supply chains create strategic vulnerability. Industrial economies discovered that reliance on a number of external suppliers created exposure to political risks, supply disruptions, and price volatility. Energy dependence functions as a form of structural weakness because it reduces national autonomy in policy decision making. Energy import dependence creates a persistent transfer of wealth from consuming nations to producing nations in 2022 alone. The United States approximately imported 2.3 billion barrels of crude oil worth approximately $232 billion, demonstrating the continued magnitude of capital flows associated with energy consumption. These financial transfers represent not merely trade transactions but structural redistribution of economic influence across the global system. The persistence of such dependence indicates that energy transition are complex and path dependent processes. Infrastructure investments, technological capabilities, regulatory frameworks, and market incentives must align in order to reduce reliance on imported hydrocarbons. Consequently, the search for alternative fuels has been motivated not only by environment consideration, but by but by also but also by strategic imperatives related to economic sovereignty, policy resources, the emergence of renewable fuel strategies. Following the embargo, policymakers initiated a series of legislative initiatives designed to reduce vulnerability to external energy shocks. Among the most significant development was the introduction of tax incentives supporting the production of renewable fuels, including ethanol. These policies aim to stimulate domestic production capacity and encourage technological innovation in alternative energy sources. Government intervention played a critical role in facilitating the emergence of the ethanol industry by reducing investment risks and creating predictable demand structures. Policy instruments such as the Renewable Fuel Standard created regulatory frameworks that guaranteed market access for biofuels, thereby incentivizing private sector investment over time. These policies contributed to the expansion of ethanol production capacity and the integration of renewable fuels into national energy supply systems. The long term effect of these policies has been gradual diversification of energy resources, reducing dependence on imported oil and increasing resilience to geopolitical disruptions. Ethanol currently constitutes approximately 10.5% of the gasoline supply in the United States, representing a significant increase from the negligible levels in 1973. This transformation illustrates the cumulative impact of sustained policy support and technological development over multiple decades. Ethanol as a strategic substitute, economic and energy security effects. Ethanol has emerged as a significant component of contemporary energy strategies due to its potential to substitute for petroleum-based fuels. The expansion of ethanol production has contributed to reduce dependence on imported oil, thereby decreasing exposure to external supply shocks. Since 1973, the cumulative production of ethanol in the United States has reached approximately 6.1 billion barrels, equivalent to 256 billion gallons of fuel. This production volume represents a substantial contribution to domestic energy supply capacity. The integration of ethanol into gasoline supply chains has also generated the measurable economic benefits for consumers. Research indicates that ethanol blending reduces fuel prices by increasing supply elasticity within gasoline markets. Between 2019 and 2022, ethanol contributed to an estimated average of $0.77 per gallon in fuel prices, generating annual savings of approximately 95.1 billion for consumers. These price effects illustrate the capacity of alternative fuel to influence market dynamics through increased competition and supply diversification. From a strategic perspective, ethanol functions as a domestic substitute for imported oil, thereby reducing the magnitude of financial transfers to external suppliers. In 2022, ethanol production displaced gasoline refined from approximately 600 million barrels of crude oil, representing approximately $61 billion retained within the domestic economy. Such reductions in import dependence contributes to increased macroeconomic stability and reduced exposure to geopolitical volatility. Persistent constraints, the limit of energy independence. Despite significant progress in diversifying energy supply systems, complete energy independence remains elusive. Global oil markets are interconnected through complex trade networks, financial instruments, and pricing mechanisms that transmit shocks across national boundaries. Even when domestic production capacity increases, price formation continues to be influenced by global supply demand dynamics. Geopolitical events continue to exert a significant influence on energy prices. For example, oil prices increased by more than 23% following Russia's invasion of Ukraine, demonstrating the continued sensitivity of energy markets to geopolitical developments. These fluctuations, these price fluctuations illustrate that energy security is not solely a function of of demo, of domestic production capacity but also of global market structure. Furthermore, the United States continues to import a substantial proportion of crude oil, with approximately 40% of refined inputs originating from foreign supplies. Such reliance indicates that structural dependence has not been fully eliminated, despite decades of policy intervention and technological innovation. Strategic petroleum reserves and supply stabilization mechanisms. Strategic petroleum reserves represents an additional policy instrument designed to mitigate the effects of supply disruptions. By maintaining stockpiles of crude oil, governments can temporarily stabilize supply conditions during periods of market volatility. However, the effectiveness of such policies depend on the size relative to consumption levels. Recent data indicates that the volume of crude oil stored in the United States Strategic Petroleum Reserve has declined significantly, reaching a 40-year low in 2023. This decline raises questions regarding the capacity of existing reserve mechanisms to buffer future supply shocks. Strategic reserves provide short-term stability but do not eliminate long-term structural dependence on global supply chains. Energy transition from hydrocarbon dominance to diversified systems. The evolution of energy systems reflects a broader transformation in technological capacity and economic incentives. Renewable fuels such as ethanol represents transitional technologies that reduce dependency on traditional hydrocarbons while infrastructure for more advanced energy systems continues to develop. Energy transitions historically occur over extended period of time horizons due to capital intensity of infrastructure investments and the complexity of technological diffusion. The shift from coal to oil in the 20th century requires decades of incremental innovation and institutional adaptation. Similarly, the transition towards diversified renewable energy systems will require sustained policy support, investment in research and development, and coordinated across multiple sectors. Ethanol occupies an intermediate position within this transition because it can be integrated into existing fuel distribution infrastructure without requiring complex system redesigning. This complexity reduces adoption barriers and facilitates incremental progress towards diversified energy portfolios. Geopolitical implications, energy, power, and international influence. Energy resources continue to shape the international power dynamics by influencing trade balances, diplomatic relationships, and strategic alliances. States possesses abundant energy resource often leverage supply control to influence global markets and political outcomes. Conversely, energy importing states seek to diversify supply sources in order to reduce vulnerability to external coercion. The oil embargo demonstrated that resource concentration can produce asymmetric bargaining power within international relations. The subsequent development of renewable energy reflects an attempt to redistribute power by reducing dependence on concentrated suppliers. Energy diversification therefore represents a strategic objective aligned with broader goals of economic autonomy and geopolitical stability. The continued relevance of OPEC within global oil markets indicates that resource concentration remains a significant determinant of international economic structures. Although imported dependence has declined, approximately 16% of US oil imports still originate from OPEC member states, demonstrating the persistence of structural linkage between consuming and producing nations. Conclusion: structural transformation and the future of energy security. The Arab Oil Embargo of 1976 represents a pivotal moment in evolution of modern economic systems because it exposed the strategic vulnerability inherent in concentrated resource dependence. The subsequent development of ethanol and other renewable energy fuels reflect a long-term effort to rebalance energy supply structures and reduce exposure to geopolitical risks. Although significant progress has been achieved, the persistence of global market interdependence indicates that complete energy independence remains unlikely in the near future. Instead, the objective of contemporary energy policy is to increase resilience by diversifying supply sources, expanding domestic production capacity, and encouraging technological innovation. The transition towards renewable fuels illustrates the capacity of policy intervention and technological progress to reshape economic structures over extended time zones. Ethanol has contributed to reduced import dependence, lower fuel prices, and increased energy security, demonstrating the potential of alternative fuels to influence macroeconomic stability. Energy systems will continue to evolve as the technological capability expansion, and geopolitical conditions change. Correction: energy systems will continue to evolve as technological capabilities expand and geopolitical conditions change. The long term trajectory suggests increasing diversification of energy sources and gradual reduction of dependence on concentrated resource suppliers. The lessons derived from the oil embargo continue to influence policy decisions, emphasizing the importance of strategic resilience within global economic systems.